Hello all, introduce my name is Queen Beryl Baressa NPM 23412042. Here I will discuss about Income Tax Article 26, Definition Article 26 Income Tax according to Law No. 36 of 2008. Income Tax Article 26 is an income tax imposed on income received by foreign taxpayers from Indonesia other than a permanent establishment, but, in Indonesia. Income Tax Article 26 is used to withhold income tax from the object of Income Tax Article 26 imposed on subjects or foreign taxpayers, foreign nationals, or WNA, other than permanent establishments. Tax object. The object of income tax, or PPH, Article 26 in Indonesia relates to income received or earned by overseas taxpayers, or WPLN, from sources of income in Indonesia. This article regulations withholding tax on income received by foreign parties who do not rest ties. Tax objects. Dividend profit sharing from companies in Indonesia to foreign shareholders. Interest income received from sources in Indonesia, for example interest from loans. Income obtained from the use of copyrights, patents, trademarks or other right in Indonesia. Income derived from renting or using property in Indonesia. Income obtained from services or work carried out in Indonesia, a form of gift that is considered as a reward or appreciation for a service, achievement, pension income or periodic payments received from sources in Indonesia. Profits from swap or hedging transactions with the Indonesian side. The benefits of debt relief provided by parties in Indonesia. Gains from the sale of assets in Indonesia, except those stipulated in Article 4. Profits from the transfer of shares in Indonesian companies. Income from insurance premiums paid to foreign insurance companies related to objects in Indonesia. Subject Article 26 Income tax. The subject of Income Tax Article, ITA, 26 is foreign taxpayers, or WPLN, who receive or earn income from Indonesia. This tax subject does not live and is not domiciled in Indonesia but earns income from sources in Indonesia. Tax subject Article 26 Income tax, individuals who do not reside in Indonesia, entities not domiciled in Indonesia. Foreign government representative, international agency, foreign tax subjects with no permanent establishment in Indonesia. Tax rates Article 26 Income tax. The general rate is 20% of gross income. The rate may differ based on double taxation avoidance agreements, or DTAs, which may reduce the rate for some tax objects. The subject of cutting definition of withholding tax. Income tax withholding Article 26 is an obligation to withhold tax from income paid to foreign taxpayers who do not have a permanent establishment in Indonesia. Cutting time withholding is done at the time of payment of income. This means that when companies or individuals in Indonesia pay dividends, interest, royalties or service fees to overseas taxpayers, they must first withhold tax before making the full transfer or payment. Tax deposit Income tax, or PPH. Article 26 in Indonesia regulates tax on income received by foreign taxpayers from sources in Indonesia. Legal basis for income tax Article 26 Deposit procedure for depositing income tax Article 26 Receiving subject Income tax Article 26 Subjects receiving income tax. Article 26 are foreign taxpayers who receive income from sources in Indonesia, foreign company, foreign individuals, international organization. Tax subjects that are not subject to tax representative officers of foreign countries. Officials of diplomatic representatives and consulates or other officials of foreign countries, who are not Indonesian citizens and only receive income from their work. International organizations that do not conduct business in Indonesia except to provide loans to the government funded by membership fees. Representative officials of international organizations in Indonesia, who are not Indonesian citizens and do not carry out business or other work in Indonesia to obtain income. Liability as taxpayer make tax deductions from income paid to income recipients in accordance with applicable rates, reporting tax deductions that have been made. This reporting is usually done periodically in accordance with applicable regulations. Fill out and submit the Income Tax Article 26 Tax Return, or SPT, to the tax authority in accordance with applicable regulations. Submitting or depositing taxes that have been withheld from income and must be deposited to the Directorate General of Taxes in accordance with established schedules and procedures. Keep records and documents that support tax withholding, such as proof of payment and others. Provide proof of tax withholding to the recipient of income, which includes the amount of tax withheld and other relevant information. The latest regulations. The Indonesian government frequently updates its taxation regulations to keep up with global economic developments. Tax rate adjustment based on double tax avoidance agreement, or DTA, adjustment of regulations related to income from digital economy, the effect of the new income tax Article 26 regulation on investment in Indonesia. So much material that I can convey less and more. I apologize. Thank you.